Chapter 8 of the financial playbook for Gen Z. Let's jump right in. Chapter 8, turn your passions into profits. Start businesses based on things you love. Turn every hobby into a stream of income because you're living an amazing life when your work becomes your play. I want to talk to you about Adele. Now, if you focus on the disappointments, you will continue to suffer. But if you focus on the lessons that are inside each disappointment, you will continue to grow. Always remember this quote from the book Think and Grow Rich. Every adversity, every failure, every heartbreak carries with it the seed of an equal or greater benefit. For example, look at the success of the singer Adele. Do you know what catapulted Adele's success as a singer? It was a heartbreak. When she first started the album 21, she soon stopped because she felt like she didn't have the creativity. But then her boyfriend broke up with her. And not only did he break up with her, but he broke up with her and immediately got with another girl and got engaged within a few weeks. That deeply broke Adele's heart, but she did not stay there in that depressed state. Instead, she looked for the opportunity that was inside of the adversity. And listen, there's always an opportunity inside of every adversity. In every disappointment, in every failure, in every heartbreak, there is an opportunity. Adele looked for the opportunity that was inside of that adversity, and she found it. She used her brokenness to give her the passion, drive, and creativity to go into the studio and create the songs that later became the album 21. And that album won 6 Grammys. 6 Grammys. Her glitch became her gift. And the same can be true for you and me. Take that brokenness you feel and let it give you the passion, drive, and creativity to create beautiful work. Always remember this. You might not change the whole world, but you can change the world of those who are in your sphere of influence. You know, one thing I know for sure about life is that every person is fighting some type of battle. And at times we feel overwhelmed because the odds are stacked against us. In those difficult moments, we are underdogs. And being an underdog can be discouraging, but also there is an advantage to being an underdog. The perfect example of this underdog advantage is James Buster Douglas. As you might remember, Buster Douglas was the boxer who was an underdog, but became the heavyweight champion when he knocked out Mike Tyson on February 11th, 1990. Buster Douglas's victory surprised the whole world because all of the odds were against him. But when you take a close look at the life of Buster Douglas, you see that he had a unique advantage, the underdog advantage. What is the underdog advantage? Well, here it is. When you are an underdog, your passion is stronger than your problem. Buster Douglas had overwhelming passion. Being the underdog, he knew that his victory would inspire the world. And the same is true for us. Our victory over the battles in our lives will inspire the world. We cannot give up. We cannot quit. We cannot stop. The world is watching us. And many people need us to succeed because our success will prove to them that there is hope in their situation. Holler if you hear me. Buster Douglas knew that the world was watching, but also he knew that his mom was watching. His mom was very excited about her son being allowed to fight Mike Tyson, and she encouraged her son. And then just 23 days before the fight, his mom died. But he used the sadness he felt over losing his mother and channeled it into increased motivation. Buster Douglas could have canceled the match as he was grieving his mother's death. But instead of canceling, he turned the grief into extreme motivation that helped him to defeat the previously undefeated heavyweight champion, Mike Tyson. That achievement shocked the world and is one of the most amazing events of sports history. Monetize your passions. What does that mean? Well, first, what are your passions? What are your passions? What do you enjoy doing? What would you do for free? What would you do if money was not an issue? What problems of this world are you the most passionate about solving? What makes you truly come alive? What personally fulfills you? What lights you up? What makes you happy? Think about those things. What are your passions? Because success does not lead to happiness. Happiness leads to success. And your happiness, your passion, the things you enjoy, your calling is tied to that. Your calling in life is tied to your passion. So the first step with all of this is to figure out what are your passions and monetize your passions, meaning turn your passions, your skills, and your hobbies into a business. Because every business, every hobby, every skill, every passion that you have is a potential business. You just have to package it and market it in a way that brings value to other people. So number one is monetize your passions. Now, here's how to officially start and effectively run a side hustle. Number one, clarify your business idea. Clarify your business idea. You want to ask yourself, what do you want to do? What problem does it solve? What value does it bring? Think through it all and write out a business plan. That's number one. Number two, choose a business structure. Now, here's a general rule of thumb. If your business is making under $1,000 each month, then most likely you should just be a DBA, a doing business as, right? A regular sole proprietor, right? You should stay as a sole proprietor, and register your trade name, right? So you become a DBA, doing business as, right? But when your business starts making between $1,000 to $5,000 per month, then you want to transition into becoming an LLC, right? You want to transition to becoming an LLC. Now, these are just general rules of thumb, right? When you start, you want to become an LLC. And then when your business starts to make over $5,000 per month, then you want to start to think about becoming an S corporation. Okay. But now these are just general rules of thumb, and it really depends on the nature of your business, right? And also the industry that you're in, right? And your particular situation. Here are two key questions that you want to ask yourself when deciding on which business structure is best for your situation. Number one, ask yourself, do you have personal assets that you need to protect? And number two, ask yourself, does the nature of your business have a high risk of lawsuits, right? So you have to think through these liability issues, because the great thing about the LLC is that your business becomes a separate legal entity. And so therefore, it's like, the legal situations, if any legal situations come up, any lawsuits, then, the lawsuit would be against your business, right? And so your personal assets would be protected. But if you're a sole proprietor and you get involved in some type of lawsuit, then that lawsuit can go after your personal assets, right? So there's different things that you want to think through, right? But again, the general rule of thumb is if your business is making less than $1,000 per month, then you're probably, best off by being just a DBA, right? But once you start making over $1,000, then you should start to think about becoming an LLC. And when you start to make over $5,000 per month, you should start thinking about becoming an LLC with S Corp election, right? Now, so number one is clarify your business idea, right? And number two is choose a business structure. And now number three is register your business, right? Choose a business name and register your business through your state's website. Number four is get an EIN number, right? You want to register to get your EIN number from the IRS website, right? You register your business through the state website, but you get your EIN number through the IRS website. Now, number five, now that you have your business registered and you have your EIN number, now you're ready to open up a business bank account. So under your business name and under your EIN number, you want to open up a business bank account. Now, ideally, open up both a business checking account and a business savings account, because you want to use the business savings account to save for taxes. And we're going to talk about estimated taxes a little bit later. Now, number six, get a business credit card. This is great because getting a business credit card, right, under your business name and under your EIN number, that's going to help you to start to build business credit, right? And you know, with building business credit, it's different than personal credit. You know, if you have a personal credit card, right, or I mean, if you have a personal credit score, right, your personal credit score. So well, let me back up. So let's see. Okay. Building business credit is so important because it opens up a lot of opportunities, right? So that you can leverage, right? And it's great. And it's done in a separate video. I'm going to talk about business credit. But now you want to get a business credit card. And of course, you want to be responsible for it, right? You have to be very responsible. You know, a lot of people get themselves into a lot of trouble with credit cards. So you have to make sure that you're going to be very responsible. Basically, here's the thing. Credit cards can be a huge benefit or they can be a huge poison based on how you use them. You want to use them wisely so that they'll be a benefit and not a poison. So number six is get a business credit card. Number seven, set up a bookkeeping system. This is super important because you must track your business transactions. To be successful in business, you must track your business transactions and create a monthly P&L statement, right? And you know, which is a P&L statement stands for profit and loss statement, right? And this is going to help you to be very organized with your business and to be able to really understand your profit that you're making, right? Now, number eight, set up an invoicing system. This is important too, because you want to create an easy way for clients to pay you and make sure that your invoicing system is connected to your bookkeeping system. Number nine, depending on the nature of your business, get all the proper forms of business insurance that you need. So it depends on what industry you're in, all right? So like, for example, one of my students just started a moving company, right? So of course, he's going to need to have a certain type of insurance regarding that, right? But, you know, another student of mine started a tutoring business, right? And so with a tutoring business, you know, you really don't need insurance, right? If you're just doing like online tutoring, you know, if you're just, you know, a one-person operation doing, you know, online tutoring, you really don't need insurance, right? So it depends on the industry that you're in, right? So you want to look into that particular situation that your business is in and figure out any type of insurance that you may need. So now, number 10, pay estimated quarterly taxes if needed. Now, let me explain this whole thing about quarterly taxes. So here's the situation. When people work as an employee, their employer withholds taxes from every paycheck and sends the money to the IRS, okay? But when people work as an independent contractor, their clients are not withholding any taxes. Therefore, if the amount of taxes that are owed is high enough, then the independent contractor is required to make estimated quarterly tax payments to the IRS. Now, the due dates of the quarterly estimated tax payments are the 15th of April, July, September, and January. Number 11, take advantage of all tax write-offs. As a business owner, one of the benefits of being a business owner is that you get the advantage of taking advantage of tax write-offs. Now, Section 162 of the Internal Revenue Code says that you can deduct all ordinary and necessary expenses paid or incurred during the taxable year to carry on any trade or business. Now, let's clarify. What is an ordinary expense? Well, when they say ordinary expense, they mean anything common and accepted to a specific trade or business. That's an ordinary expense. Now, what do they mean when they say necessary expense? They mean anything helpful and appropriate for the nature of a specific trade or business. So that gives us business owners a lot of opportunity to write off a lot of things, right? Because basically, we can deduct all ordinary and necessary expenses paid or incurred during the taxable year to carry on any trade or business. Examples include advertising, use of cell phones, travel expenses, use of vehicles, labor costs, cost of goods sold, supplies, use of home office, educational courses, professional services, bank fees, subscriptions, business insurance, and much more. Now, number 12, hire a professional, right? So in the beginning stages of your business, right? You might not really, you might be doing everything yourself, right? In the beginning, when you're small, you can do a lot of stuff by yourself, right? But as your business starts to grow, at some point, you want to start to hire professionals, right? For example, you want to start to hire a professional to do your bookkeeping for you, right? At some point. But always stay aware of what's going on, right? Make sure that you hire a professional who has the heart of a teacher, someone that's going to, do your bookkeeping, but at the same time will explain to you what is going on and keep you in the loop. That's important that you stay in the loop because ultimately you are responsible for your business. So don't just blindly allow professionals to handle it for you, right? Make sure that they are explaining things to you. Make sure that you're staying aware of what is going on, Now, so let's talk about sole proprietor versus a single member LLC, right? So here's the thing: a sole proprietorship is an unincorporated. A sole proprietorship is an unincorporated business with one owner. It's the simplest and least expensive type of business to form. An individual who operates a business on their own is by default a sole proprietor. There's no legal separation between the business and the business owner. So the owner is personally responsible for the business debts. Now, a single member LLC is a limited liability company with a single owner. There is a legal separation between the business and the business owner. So the owner is not personally responsible for the business debts, right? Now, which one should you choose for your business? Well, things to consider. Do you have personal assets that you need to protect? For example, if you are a young person just starting as an entrepreneur and don't have a lot of personal assets, you might not need to form an LLC right away. A sole proprietorship might be all that you need initially. Now, does the nature of your business have a high risk of lawsuits? That's another important question to ask yourself. For example, if your business is a small online tutoring business, you might not need to form an LLC right now, right? A sole proprietorship might be all that you need. Now, does your business generate over $60,000 in net income, right? Are you generating like more than $5,000 of net income per month, right? Which is $60,000 per year, right? If you're at that level, then you might okay. So if you're not at that level, if you're not generating over $60,000 of net income every year, you might not be able to really benefit from the tax advantage of having an LLC with an S corp election, right? Right. If you're making under $60,000 of net income, then maybe you should just be just an LLC, right? But when you start to make over $60,000 of net income every year, then you want to look at becoming a special type of LLC, which is an LLC with S corp election, right? So let's see. So here's an example. If you're making $60,000 in net income every year, okay, as a sole proprietor, you would have to pay self-employment tax 15.3% on the full $60,000 net income, in addition to regular federal and state income taxes. Now, as an LLC with S corp election, you could classify a portion of the $60,000 as reasonable salary for yourself, and the other portion as a shareholder distribution to yourself. You would not have to pay self-employment tax on the amount that was classified as shareholder distribution. So let's look at the numbers. Of the $60,000 of net income, let's say you classify $20,000 as a reasonable salary and the remaining $40,000 as a shareholder distribution. You would have to pay self-employment tax on the $20,000, but not on the $40,000. You would still have to pay federal and state income taxes on the full $60,000, regardless of whether you are a S corp or a sole proprietor or regular LLC. But your self-employment tax would apply to only if you're an S corp, right? If you're classified, if you have the S corp election, your self-employment tax would only apply to the $20,000, right, as a S corp, compared to the full $60,000 if you were not an S corp, right? Thus, you would save $6,120, right, which is 15.3% times 40,000, right? You save $6,120 in self-employment taxes. However, setting up and maintaining an LLC with S corp election is complex and requires additional administrative costs and more advanced tax filings. You have to carefully research to make sure that the tax savings are worth the extra hassle of that difficult tax strategy. Now, registering as a sole proprietor is super easy and costs very little. In Maryland, for example, the filing fee to register a trade name is $25, and it is valid for 5 years from the date of acceptance. And the renewal fee is also $25, right? And the renewal fee is just $25 for every 5 years, right? In contrast, the cost of registering as an LLC in Maryland involves a filing fee of $100 and an annual fee of $300 every year, right? I encourage young, small-time entrepreneurs to start by registering as a sole proprietor. Here are the steps. Okay, so in Maryland, so first, step number one is register as a sole proprietor with your states. In Maryland, the website is the Maryland Business Express. 2, register your trade name with your states, right? Register to get your EIN number via the IRS website. Open up a business checking account under your business name and business EIN. Set up and maintain a simple bookkeeping system. Set up and maintain a simple invoicing system. Monitor the growth of your business and be ready to transition from sole proprietor to LLC, right? And then later from LLC to LLC with S Corp election, right? Determine if your business needs to pay estimated taxes, right? Now, if you're an employee, your employer withholds taxes from every paycheck and sends the money to the IRS and probably to your state government as well. This way, you pay your income taxes as you go. If you're like most wage earners, you get a nice refund at tax time. But if you are self-employed, or if you have income other than your salary, right, you may need to pay estimated taxes each quarter to square your tax bill with Uncle Sam, right, with the IRS, right? You may owe estimated taxes if you receive income that isn't subject to withholding, such as interest income, dividends, gains from sales of stock or other assets, earnings from a business, taxable alimony, right? Now, here's a question. Do I need to pay estimated taxes? Well, that depends on your situation. The rule is that you must pay your taxes as you go. If at filing time, you have not paid enough income taxes through withholdings or through quarterly estimated payments, you may have to pay a penalty for underpayment. To determine whether you need to make quarterly estimated taxes, you should answer these questions. Number one, do you expect to owe less than $1,000 in taxes for the tax year after subtracting your federal income tax withholding from the total amount of tax you expect to owe this year? If so, you're safe. You don't need to make estimated tax payments, right? If that's the case. Now, another question. Do you expect your federal income tax withholding, right, plus any estimated tax paid on time to amount to at least 90% of the total tax that you will owe for this tax year, right? If so, then you're in the clear and you don't need to make estimated tax payments, right? Another question, do you expect that do you expect that your income tax withholding will be at least 100% of the total tax on your previous year's return? Or if your adjusted gross income, right, on your tax return was over 150,000, right? Do you expect that your income tax withholding will be at least 110% of the total tax you owed for the previous year? If so, then you're not required to make estimated tax payments, right? So if you answered no to all of those questions, you must make estimated tax payments, right? To avoid a penalty, your total tax payments, estimated taxes plus withholding during the year must satisfy one of the requirements we just covered, right? Which option should I choose? Well, that depends on your situation. The safest option, right, to avoid any underpayment penalty is to aim for 100% of your previous year's taxes, right? If your previous year's adjusted gross income was more than 150,000, you will have to pay 110% of your previous year's taxes to satisfy the safe harbor requirement. If you satisfy either test, you won't have to pay an estimated tax penalty, no matter how much tax you owe on your tax return. If you expect your income this year to be less than last year, and you don't want to pay more taxes than you think you will owe at year end, you can pay 90% of your estimated current tax bill, right? Now, if the total of your estimated payments and withholdings add up to less than 90% of what you owe, you may face an underpayment penalty. Avoid cutting your payments too close to the 90% mark to give yourself a safety net. If you expect your income this year to be more than your income last year, and you don't want to owe taxes when you file your return, try to pay 100% of your estimated current year tax liability.